What's up, studs? Kunal here. Bulls on Wall Street. Holy market meltdown today in the Magnificent Seven stocks, semiconductor stocks, AI-related stocks. It was across the board in the tech land, led by all the high flyers of 2023 and 2024. You know, people have been talking about this AI bubble for a little bit of time, and we are starting to kind of see that deflate. Now, that doesn't mean they're going back to zero or, back to even where they started, but it is very common to have, right, some big pullbacks, even in the context of big secular runs. And, the AI run could last for maybe 5-10 years. You never know, right? And so having, even 30, 40, 50% pullbacks is something that's in the cards. And so you can see the NASDAQ was down 3.22% today. That's the biggest down day we've had in a little bit of time. Nothing like a crazy carnage, I would say. I mean, it was carnage, but it wasn't anything that we haven't seen before, right? We just recently, had, a pretty big down day, right? Where the market, reversed down about 13 points and, very similar kind of action. And we, in the past, we've also had typically down days. Look, when the market goes up, it goes up slowly. And when they come down, it comes fast. And so this is the nature of the game. Now, the good thing is, look, we're starting to get a little bit oversold. We're not completely there yet, but we're starting to see the remnants of that. And so I think that'll be a help. And frankly, look, we needed to relieve some of the pressure in the markets. A lot of stocks were up a lot. And, we're just kind of chasing these grindy setups. Now we're going to have a little bit more meat on the bone, but it will take time to heal. So like as the market's pulled back and these stocks have pulled back, they're going to need a lot of time to heal. So like if you look at something like, for example, like, right, a Dell Computers or something like that, that topped out in March, like this takes time to heal, right? Like it's like, think about for it to go back into this phase, what do you're going to need to see a lot of sideways consolidation, a lot of pops and drops, recycle all that out, and then, you'll start to see it. So, same thing with MU and, right, things like that. When you have these kind of, right, larger kind of topping patterns, you may still get an inevitable pop and still a pullback. These things take time. And so it's a good thing, though. I think it's a really good thing. We want to see, these things pull back. Look, if this thing gets to the 200-day moving average, it bounces there pretty much every damn time, we'll have ourselves some good buy opportunities. And so I think this is an awesome thing. We need to see it. I have a couple worries today, which is, the NASDAQ got dumped off, but then also the IWM got dumped off too. It was holding on late into the day. And then finally, with the Qs just getting so sold, the traders just gave up on this one too. So that's something to keep into the back of your head. A couple other things that I think are red flags that indicate a shift in how people are trading. Earnings plays are getting sold off. For example, right, when Netflix had its earnings out, it spiked up to 680 or 675 that day, and then it got completely sold off by the end of the day. You can see here, right? So the first, right, couple minutes, it spiked up, and then it just, boom, right, got sold off. And so that's not a good action right there, right? If you see Google, Google gapped down and then went sideways. But yesterday in the post market, Google got up to about 186. So it was flying up. And then the sellers came in. So people are using this as a liquidity trap, right? And it's a liquidity trap for retail traders. But big money is using these pops now for liquidity. They're selling off. They're distributing. So we're in a distribution market right now, and this can go on for a little bit of time. We don't know. What it feels like to me, and I'm just throwing a wild guess out there, is maybe we get some rate cuts coming earlier than we think in July 31st, and the market feels like it's doing that, and it's selling off accordingly. A lot of times people think, okay, rate cuts mean that the market will go flying. No, a lot of times if the rate cut comes out of the blue, it could lead to some type of panic that these guys know something. And look, there's a lot of headwinds, of course, beyond just price action, right? We have big federal deficits. We have an election. We have all sorts of, cross currents happening, things that are above our understanding, right? We're just chart drawers, but there are a lot of things going on that we need to be aware of. And so keep an eye on that 31st. We get rate cuts. That means they think we're fucked. And, we may get a little bit of a sharper pullback. But in essence, like, look, we needed this pullback. Here we are. The SPY is also on the 50-day moving average. My thinking is this. If we gap down tomorrow, guys, we're going to long, all right? Now, the long will probably be maybe just for a day or two, and then we'll see. The charts are at this point broken in a lot of the big tech names that we like to trade, and so we could have a couple days bounce, but it doesn't heal it enough to, get it back into highs or something like that. But if you see here, we're at the 50-day moving average on the SPY, and on the Qs, we're, blew under the 50-day moving average, but we broke the lower Bollinger Band too. And so I think, a little bit of stretch, like if we gap down into this, we'd be kind of, it would get us enough out of the 50-day and out of this Bollinger Band to kind of probably snap it back, all right? The plan for tomorrow is to really just trade the most liquid names, and also, I want to keep an eye on this IWM. It held the 9 EMA. If the market bounces tomorrow, I want to see if this breaks out, right? Does it break this range or not? If it fades off, if it tries to break the range, like today we had a little spike up. If it tries to break the range, something fades off, that's a no buenos right there, right? If it fails, if the market keeps pulling back and it fails this breakout spot, then it's probably everything's getting thrown out with the bath water at that point. So just got to keep mind of these type of things. We're not in some nasty kind of thing. We're not in bear market. These things happen, but we do have to be prudent, right? We do have to be prudent. And today was an awesome day to trade. So it really was. It was incredible. Dude, I took so many trades today. We were in the chat room. I never stayed to the close, and I was in there to the close, dicker and dealing with everybody. So let's do a couple things here. First of all, there were some interesting earnings plays after hours here. VKTX had earnings out. Now has earnings up. So this will be something that I want to watch for tomorrow, because that's a pretty big tech company, maybe a couple $100 billion or something along that end. It looks like they beat by 29 cents. Revenues beat by 20 million. Look, if this gaps up 7%, it fades off tomorrow, then that's the clue, right? That's the clue that the market's going to rug. We had Chipotle up 4%. That's sitting right on the 200-day moving average. It looks like it's giving it back a little bit. We'll take a look at it. PI is another company beat by 9 cents. This is a nice website. Just found it last earnings quarter. It's free. TheStockCatalyst.com, no affiliation or anything. IBM up 3%. So we do have some decent kind of earnings coming here. And then on the downside, look, Ford is getting taken to the woodshed. GM just did, right? QS is also getting smoked out. And then we have a handful of other kind of no-name ones that we'll have to keep an eye on. LVS will be something, right, to keep an eye on too, because, a lot of times when LVS or MGM speaks, what they're speaking of in their earnings calls is often the overall health of the economy, the overall health of the American and international consumer. And so we always want to kind of keep those guys into the back of the head here. But, otherwise, I didn't see anything too crazy here that we'll have to be, mindful of. The market is gonna do what it's gonna do, but we do have to just be very cautious. I would not take any swing trades right now, guys. I wouldn't take any swing trades. And what I mean by that is, like, if you're looking to try to load up and get into, right, a bunch of swing trades because the market looks cheap, there's a time and place for that. You want to do that in the Goldilocks zone when the markets are trending and you have like kind of the wind at your back. You want to do it in these phases here. When you start getting, into these downtrends and you're trying to bottom pick, it's like it doesn't really matter the price that you buy a stock. For example, what I mean by that is, like, look, if you buy a stock and it's crashing down, you buy it at 60, right? But it takes you 6 months, because it goes sideways. It takes you 6 months for it to go to 80. Or, you wait till it rounds out, it starts curling up, and you end up buying it at 70, but it takes you 4 days to get to 80. What's better, right? So it's not just about the percentage gain, but the velocity of the game, right? How fast the movement is in relation to, right, where you're buying and how efficiently your money is working. So our plan for tomorrow is to keep things very basic. I have a couple stocks that I do want to look at for potential shorts here. TTD, nasty failed breakout here. Failed breakout here. Nasty little rug. Any kind of pop at the open on this, we go green to red. Obviously, Tesla was treated very, very badly. The SSR will be on it. But any kind of gap up on this, let's see if we go green to red. AMD's got a big breakdown over here too. She got test right here at this kind of 144 zone. AVGO breaking under the 50-day moving average. You got a little bit of a bear flag right here too, right? So you got a little bit of the bear flag right there. Let's see if this thing breaks down. And then, of course, we got NVDA also breaking down here. Very key, man. This thing is breaking under the 50-day moving average. It hasn't tested it since, end of April. And we've got it's so extended. When a stock is still 100% over its 200-day moving average, it's up a lot, guys. When a stock is up over 100% from its 200-day moving average, it's up way too much, right? Way too much. It hasn't tested the 200-day moving average at all since the run started. It's time. It's gone up 1,000% during that time. Now, will it get down to 80? Probably not, right? But these are the things and scenarios that we want to just kind of keep abreast. But this could be just the beginning of the drop, So let's see if this goes green to red too. Now, on the other side of things, man, ENPH, right? They had their earnings out. Nice reaction on this one. So I want to keep some of these solars on. I thought this one, Nova had some, both had good enough range. Nova did not pop through today because the 200-day moving average are right on top, but nice range. It was getting picked up. That's what you want to see on this thing. I think run is still holding up pretty well. You have a breakout spot right here also. So these are the kind of names that I would like to, be participating in if we're looking at longs. HIMS, I think, is another one. It's an IWM play. So you had this big trend, and then this is an inside day. Man, this thing is so tight right now, right? Man, when you have a market just pulling back like that and this stuff barely moves, that's really good, right? So let's watch this one. If it takes out 22.75, I think it's ready to shred. And then, if we need another short, this crowd has got, right, kind of a three bar pattern here that, if it breaks below, you should stay below these kind of lows here. You should get a subsequent downside. Now, look, if we get the big gap down, right? If we get the big gap down, then we can try to long something like a Taiwan semiconductor or, an MU or a Dell, something that's I want something that's below the lower Bollinger Band. I want something that's below the lower Bollinger Band. So I want something that's really stretched. So if we get a big gap down, probably MU would be the one because it's a 10-8 stochastics at the lower Bollinger Band. But you want the gap down. If these stocks gap up tomorrow, then they either are going to be choppy or they might fade back and retest, all right? When you are doing rubber band type setups, you really want them to kind of get shredded back down. Otherwise, it's just a nothing burger, right? So let's keep an eye on the IWM stocks. Be very careful, guys, on the large caps. Look, there were a lot of failed breakouts here. Look at this PLTR. Failed breakouts, guys. Failed breakouts lead to fast down moves. We've got to be careful here, right? Coin, nasty, right? Failed breakout at this point. We got to be careful, right? We want to make sure that we don't get caught in some trap. There was something fishy about the market today beyond just, hey, Tesla had bad earnings. There's a lot of cross currents happening. Hey, manage your risks. It's a day trading only environment for now, I think. I love you guys. Peace.